Hello and welcome to The Blockchain and Us, where pioneers and thought leaders talk about their journey in blockchain technology, crypto assets, and the token economy. And I'm your host, Manuel Staggers. If you enjoy this podcast, please give it a top rating and review on iTunes, and feel free to follow me on Twitter at Manuel Staggers. This episode is brought to you by Descartes Finance. Descartes is the leading Swiss digital wealth manager, providing its products and services to individuals, family offices, charitable organizations, banks, and asset managers. Its investment strategies lead the way. They harness the largest know-how as only a digital investment advisor can. To learn more, please visit www.descartes-finance.com. This episode is brought to you by Crypto Storage. Crypto Storage offers a proprietary solution to enable professional storage of crypto assets. The storage is secure both physically and digitally on the highest grade hardware security modules with detailed configuration possibilities for individual-based access control. To learn more, visit www.cryptostorage.ch. My guest today is Alex Tascott, a writer, speaker, investor, and advisor focusing on blockchain technology and cryptocurrencies. Alex and Don Tapscott together wrote the best-selling book Blockchain Revolution: How the Technology Behind Bitcoin is Changing Money, Business, and the World. In 2017, Alex and Don founded the Blockchain Research Institute in Toronto, which is a think tank investigating blockchain strategies, opportunities, and use cases. And now, to the interview. Hey Alex, thanks a lot for taking time today.
Thank you, Manuel.
Alex, we met when I made my documentary, The Blockchain and Us, and then your book, Blockchain Revolution, had just come out. And since then, a lot has happened in this space. So what are the main changes that you've seen?
Well, first of all, I want to say thanks for having me on the show, and congratulations on the success of the documentary, The Blockchain and Us. I actually was reminded of it recently because I think it's a great source for people, and I sent them the YouTube link, and I realized that you have almost 400,000 views of this film on YouTube, which is really incredible.
Thanks, Alex.
So your film came out a year ago, I think roughly, and Blockchain Revolution actually came out 2 years ago. So by the time your film had come out, I actually was able to reflect on 1 year since the book had been released and tried to assess what had happened, what had changed, what had we got right and what have we got wrong. And now it's great to be able to do that again. Because it's not only the 1 year anniversary of the Blockchain and Us, it's also the 2 year anniversary of Blockchain Revolution. And also this month, June of 2018, we will be releasing a new edition of the book with 2 new chapters. So I think when we spoke last time, the whole crypto asset market was worth maybe $50 or $60 billion. Most of that value was still in Bitcoin, though Ethereum was emerging seemingly out of the blue as another big contender in the crypto asset universe, but the whole ecosystem was still relatively nascent. And what we've seen basically over the past year is transformations in a few different areas. So the first area, and the most obvious one, is in the fundraising space. So the amount of money raised to date prior to your film coming out, I think probably would have been in the $200 to $300 million. I'm basing that off of the number for 2016, which is 165 million. In token creation events, or ICOs as they're known. And in 2017, the number was in the billions of dollars. And it's impossible to know how much, but it was probably in the range of sort of $5 to $7 billion. And it's continued basically unabated throughout 2018. So what's happened since the film came out is that the entire venture capital world has been completely transformed. Now, basically, if you're a company or a project and you need to raise funds, you don't have to go to Silicon Valley or to your local VC or to the bank. You can tap into a global marketplace and have your community or your user base fund your growth. And that is a profound and important innovation that's leading to some big changes in venture capital.
Right. I mean, sorry to interrupt. I mean, that's exactly the one thing that's missing in the film, right? ICOs. Because that was so fresh back then. But now, of course, a lot has happened. So
yeah, absolutely. And it's funny. I mean, I've been talking about ICOs in various forms for a few years. We just didn't call them ICOs. In the book, we called them global blockchain IPOs. And we talked about Ethereum and Augur, 2 projects that had token creation events that eventually led to the launch of some big things, Ethereum bigger than Augur. But what I think a lot of people have missed in the past year, focusing mostly on the asset price appreciation and on the speculation in a lot of these tokens, is that there's something more profound occurring, which is that the infrastructure and the nascent application ecosystem for this new Internet of Value, which we've talked about, is now emerging, and it's emerging in these distributed protocols and these distributed applications. And what we've done over the past few months, basically, is to really try and analyze all the things that have changed. And so much has changed that we decided to add it to the book and basically re-release the book with at least 75 new pages of material. So
cool. Can you talk about what kind of changes you're making to the book?
Yeah, sure. So when the book came out originally, the whole value of the market was about $10 billion, and it was mostly Bitcoin. Ethereum had just launched months earlier. We were actually there for the creation of the Genesis block and the consensus offices, which we talk about in the book. But beyond that, there wasn't really much else happening. And the concept of distributed applications and enterprise blockchain and smart contracts and digital identity and all of these important concepts were fairly early stage and pretty theoretical. And to be clear, it's still early in a lot of these areas. But what we've seen over the past couple of years is a lot of big changes. So the new edition of the book looks at a few key areas. The first one is the emergence of the crypto asset world. So basically, what are these different crypto assets? What do they do? How do they work, and why are they important? We spent some time talking about smart contracts. So we spent time with Nick Szabo in trying to look at how the smart contract universe has evolved significantly compared to anything else, right? And we've looked at digital identity systems that are being used and created. And we looked at enterprise blockchain adoption, which is something that was very, very early stage and very new when we basically wrote Blockchain Revolution. You may recall in the 2016 frame, it was Bitcoin bad and blockchain good. And now we're starting to see a much more nuanced perspective, which I think is born of a better understanding of the industry, which is that, well, actually, these distributed systems that have tokens, things like Bitcoin and Ethereum, might actually be the most powerful, the most trustworthy, the most secure platforms that big companies and governments can use. And as a result, they're embracing and adopting that technology. So that's a big shift as well, which we cover in the book.
Mm-hmm. Cool. Are there things also where you found that some of the predictions or some of the views that you had in the book that you had to revise them?
Well, certainly there are some companies that we covered in the book, which we thought were very promising at the time, that didn't pan out. And that's true when you're writing about early stage technology in any industry, honestly. For every Google, there's 20 search engines that don't work out. But in the 1995, 96, those other ones might seem more interesting. But the point is that the underlying concept of, search engine ended up playing out and became hugely disruptive. So I think we see some of that in the book where, certain companies or certain use cases, maybe the teams ultimately didn't succeed or their plans did not unfold the way they thought they did and someone else took over. But the underlying ideas and themes themselves have played out quite closely to what we talked about, which is great. We talked about how, governments could issue their own cryptocurrencies. We didn't expect it to be Venezuela who would be taking the lead there. We thought maybe it would be, the ECB or the Federal Reserve or something like that. But in retrospect, with hindsight being 2020 as it is, it actually makes perfect sense because, a government that's under sanction that has a bunch of captive resources like oil might want to create a different payment system to sell its, most valuable commodity, which is an interesting kind of concept that's come and played about recently. So, yeah, gosh, we're eager to say where we got things wrong. We're pleased to say where we got things right. But really, it's just been amazing that a book that was pretty bold in what it predicted may have been too conservative in some ways, which is kind of interesting.
Mm-hmm. Interesting. I just wanted to ask about that. Have you also gotten some criticism for your optimism? Even though you said it's maybe a little bit erring on the conservative side, but I'd say it's very optimistic about what this technology can do. But have some people criticized you for that?
Yeah, sure. People criticize you for lots of things. Haters gonna hate. But the thing about our book is that we're optimistic about what the technology could do, but we're not techno-determinists. We're not saying just because blockchain exists means the world is going to become a better place. We talk about all the reasons that blockchain could fail. We dedicated an entire chapter to the 10 showstoppers that could, make this whole thing not worthwhile. Governments could try and crush it, or big companies can try and usurp it. Criminals will continue to use it, undermining its legitimacy. It could be a job killer. It could create all sorts of other problems. The technology couldn't scale. There's lots of reasons why blockchain at the time might not have succeeded. And even today, I think a lot of those are open questions. So I'm not saying that it's a done deal at this point, but I think there are reasons to be optimistic. But what we said in the book was that, and have said since, is that, technology is just a tool, right? It doesn't have any moral agency. It's not a good guy or a bad guy, right? If you think about the first technologies like fire, for example, can be used to heat your home, and it can be used to burn it down, or burn down your neighbor's home, burn down your enemies. So the same thing can be applied to any technology. Even the internet was this, distributed democratizing technology that ended up basically getting captured by a bunch of massive data aggregators who control absolutely a few key industries and know everything about us and undermine our privacy. And, it's not to say that the internet hasn't created lots of value along the way, or that people don't willingly enter into this bargain where they give up all their information in exchange for free services. They do. But the point is that it didn't quite play out the way people had expected.
Yeah. Well, it's these externalities, right, that people underestimate.
Yeah, they underestimate the externalities, and they also underestimate the unintended consequences. The externality of us giving up data is a cost borne by society and not by the companies. But I'm not sure that's true. I think the big externality in the crypto space would be energy use,
right?
Which, to support these systems, we need to burn a lot of energy. And I'm not suggesting that that's going to be the case forever, but at least for the time being, it's an issue that I think the community itself doesn't really spend enough time addressing head on, which is that, if we're going to scale these systems, it's not enough to say that, big brick and mortar banks also use energy, or money that's deflation or that's inflationary also sort of burns value along the way. We have to address the fact that Bitcoin and other proof of work currencies and networks do use up a lot of power.
Yeah, exactly. And it may be a problem if it used less power, right? It may be exactly a fail-safe mechanism that you need to use a lot of energy to change what's in the blockchain. So, it may be a feature.
That's certainly true. Maybe that is the trade-off that we're making, but we shouldn't. If that's the case, then we can't be delusional about it. We need to, admit it and find ways to scale it within those within those restraints. I'm surprised that people think of me as an optimist. I'm always quite sort of negative on a lot of things. I look at what happened last year with the ICO space, and I did say that it's an important innovation for entrepreneurs, and it's going to be disruptive for venture capitalists, and that's true. But if you look at the quality and the distribution of these ICOs, I think a lot of them are, not particularly high quality, that there are a lot of people who might find themselves on the wrong side of a trade, holding something that they thought was valuable but was worthless. And worthless because, they were misled in some fundamental way by the team that was doing the project. So I think that the marketplace today is not without its risks. It's not without its inefficiencies. It's not without its problems. But on balance, I think that the innovation has been positive.
Mm-hmm. Yeah, cool. Yeah, and I think you said that also when in our last interview. You also said if big companies only focus on cutting costs with the blockchain, then they'll miss all the opportunities. Have you seen that pan out as well?
Yeah, absolutely. Well, what I have seen actually is most companies looking at blockchain as a way to reduce friction and cost within their enterprise. And what I said to you in the last interview was basically, if you only focus on cutting costs, then you might miss how this technology could disrupt your underlying business or even the whole industry that you operate in.
Yeah.
And cutting the cost on the margin will be irrelevant when that whole revenue stream goes away. And I think today we've seen enterprise adoption and awareness of this technology increase significantly, and that's been terrific. But when I talk to people in the enterprise, a lot of them come to me with mostly with efficiency ideas, not with innovation ideas. And that's something that actually led us to the creation of the Blockchain Research Institute, which when we spoke last time was 6 weeks old, and now has been around for a year and a bit, and counts as its members, 50 large enterprise members. And our goal with the Blockchain Research Institute is to help companies get past that mind space where they're only thinking about how this can make efficiencies happen or reduce friction within their enterprise. We're trying to explain to them, or not explain to them, help them in their journey in developing a strategy and then developing or identifying opportunities to apply the technology to their business. So I think that things are changing. To go back to your original question, I think more and more companies are thinking strategically. I hope that our work in the space is having some impact in that regard, but there are lots of other groups that I think are helping to move things along as well. And I still abide by that initial assessment, which is quite simply that, innovating yourself at the margin is not going to be sufficient, because what a lot of companies don't realize is they're standing on a burning platform where the cost of sitting still or staying put is actually higher than the cost of taking a leap. And so they should be thinking about how to get off this burning platform as quickly as possible.
Yeah, it's easier said than done.
No kidding.
I mean, I spoke to some of these companies who have pilots running with blockchain technology, and many of them said very similar things. They said it's easy to get a pilot off the ground, where you can kind of fly under the radar. It costs very little, but then you get some early results, and then you have to go to management and get real budgets to get to the next step, and that's where the problems start. In some cases. I mean, what kind of arguments have you seen that have, been the winning arguments there?
Well, you make a very good point, which is that it's easy to stand up a pilot inside of an organization. And typically, the organizations that are doing a lot in blockchain usually have some champion inside of the organization. And that champion is, either someone who's operating inside of a business unit, or they're, on the innovation team, or they're someone who's taken up the personal, mantle of leadership and is just trying to get something done. And all of that's admirable. But I think if you need, if you really truly want to innovate inside of a big organization with all those challenges that you just outlined, you need to have buy-in from the top. I mean, the C-suite needs to be on board with this. Otherwise, the pilots will not turn into real lasting transformations. That's just the way it is. They'll get shelved and then people will move along with business as usual. So going back to the Blockchain Research Institute, we have, members who our point of contact inside of the organization can be someone who's either in the CEO's office or the CEO or the CIO or some other C-suite executive themselves. And I'll give you a really interesting example. So FedEx is a member, and my father, Don Tapscott, who started the Blockchain Research Institute with me and runs it, was talking to the chief information officer of the company, who's a legendary guy, has been rated as one of the top CIOs in the world for many years over his sort of 20-year tenure at FedEx. And when he started to talk about blockchain with Don, he said, "Oh my God, thank God we're having this conversation." Because Fred Smith has been on my tail about this thing for 6 months. Fred Smith's the CEO and founder and the guy who created FedEx.
Cool.
And so, Fred Smith is someone who has been in the logistics, parcel shipping, supply chain, just-in-time delivery business for 40 years. And that business is transformed many times over because of technology. And, FedEx is looking at blockchain as an opportunity to radically disrupt how supply chains work, right? Instead of, your best piece of information being whatever the latest person said has occurred, everyone could be operating on the same common ledger of transactions and the same common ledger of information. And you could know with 100% certainty that a good package in one location had gone through all the different checkpoints and was arriving on time, and that all duties and levies were paid, and that the goods were not counterfeit, and that they weren't tampered with through integration with some IoT technology, sensors, and tamper-proof packaging and the like. And so now you've got a system that could basically take supply chains and turn them into asset chains, where we're not really thinking about the chain of custody. We're looking at actually assets themselves and how they move through the system. So Fred Smith's the CEO, gets it. And he's the kind of guy who I think would probably completely upend the way his information systems work in order to get an edge, because it's a cutthroat business and there's new kinds of competition from Amazon, Uber, and God knows who else.
Yeah, sure.
He's someone who's prepared to innovate and disrupt himself and to protect what's his. And I think that's a great example of, and FedEx is doing this, not just through the BRI membership, but also through a number of pretty important projects. And they're collaborating with startups and they're working with consortiums and they're doing all sorts of great stuff. So that to me is a perfect example of what's required. If it's just someone in the innovation team who's doing a proof of concept or a pilot, I mean, that's good. And there's nothing wrong with that. But how are you going to take that and make it a big transformation for the enterprise? You need to have, innovation, first of all, be a culture of the firm, but you also need to have buy-in from the top.
Yeah, that's the challenge, right? I mean, it's certainly easy if the CEO comes to you and says, hey, I read about blockchain technology, make a pilot and see what we can profit from that. But it's usually the other way around, right? Where it may look like it's kind of taken off and then the budget dries up and you don't really get the results you promised and these things die, right? I mean, some of these pilots died and that's unfortunate.
Sure, lots of them do. I mean, you could say that in 1995, Blockbuster had launched a home delivery system for VHS and DVDs. They may have found that internet connections were too slow and that people didn't understand how to use the interface and that the profit margins on such a business were prohibitively low. And they might have said, well, that was a stupid pilot, let's give up. And then Netflix came along and sort of perfected that. But the bigger innovation was not in this initial pilot or this initial sort of step in using the technology. It was actually something much more profound. And Reed Hastings at Netflix understood this. Like Reed Hastings, from the very, very beginning, saw that once the technology was sufficiently scalable, then he could deliver all of this content over the internet. And this, mail order thing was really just a stopgap along the way. It's just sort of an interesting thing where Blockbuster didn't even do any of that, to be clear. Like I'm saying, like they were actually very slow to do anything. And by the time they got around to it, they had been completely disrupted. But it's easy to see sort of pilots in early stage nascent technologies that maybe don't pan out the way you think they will. And that's either because you're setting your sights to not far enough or not ambitious enough, which is obvious, or you're not seeing, how as the technology scales, the application and use case will become more and more valuable. That makes sense.
I mean, there's certainly many industries that would like to see blockchain technology and cryptocurrencies fail. I mean, especially here in Switzerland, right? You still see a lot of reluctance from the traditional financial sector to acknowledge that cryptocurrencies are something that's interesting and something that could also help them.
Yeah, I think that cryptocurrencies and smart contracts and blockchain technology, broadly defined, pose an existential risk to the business. I mean, we've got if you have a payment network that allows you to move value peer-to-peer, then you don't need a lot of services of a bank. If you've got a marketplace for the creation of new capital for companies through ICOs, then investment banking and venture capital begins to become a lot less relevant. If you've got decentralized exchanges where wallet-to-wallet transactions are possible, basically meaning when you and I enter into a transaction, it executes peer-to-peer without a centralized intermediary, then all of a sudden exchanges like the NASDAQ and TMX and ICE and others begin to look not as interesting as well. So yeah, I think there's potential to completely upend every single part of this industry. And, we're seeing it actually play out, which is the most gratifying and amazing thing. But it's not like you're doomed no matter what. I still think that there are lots of opportunities for financial institutions to create value in this industry, but they just have to understand that it might not be in the same way that they were in the past. I think that if you look at crypto assets as an asset class, I mean, they're worth hundreds of billions of dollars. It's a massive opportunity, and it's still an inefficient market. And right now, there are huge institutional clients of banks all around the world that are trying to get exposure to this asset class. So that's one. I mean, there are lots of startups that are still looking to be connected to the old financial world and need an on-ramp and an off-ramp to bring fiat into this ecosystem.
And they all have difficulty, right? I mean, it's not easy to get...
Yeah, and yet banks are not opening up accounts. That's right. So banks... So why? I mean, are they just trying to postpone the inevitable? Are they trying to cut their own competition out? I think that's eventually
what they try to do.
I know, but I think eventually that's a losing strategy. I think, you need to, maybe if you had customers that were in this industry, you'd learn a thing or two and you'd figure out how to actually use this technology rather than try and hide from it. So what I said to you in the book, and I think maybe last time, is that, focusing only on on making things work better today is going to prevent you from potentially seeing how it could change things profoundly in the future. So the way to think about it is not to focus on the earnings line, like on the cost line, but think about the revenue line. What are the possibilities for new kinds of businesses that can be launched and enabled with this technology? And it's not an easy question to answer, and I don't pretend to know exactly how that is going to play out. But what I'm saying is there are ways, and people just need to figure it out.
Let's take a quick break for a message from our sponsors. Descartes Finance takes tradition into the future, harnessing a combination of cutting-edge technology and personal advice in the service of your personal interests. Descartes cuts through the financial noise and focuses exclusively on scientific and evidence-based investing to give investors a better understanding of how to view the financial markets and provide them with their respective investment strategies. To learn more, please visit www.descartes-finance.com. That's DESCARTES-finance.com. Crypto Storage is part of the Crypto Finance Group, providing services for professional financial intermediaries and therefore bridging the gap between traditional markets and blockchain technology. The storage solution offered by Crypto Storage raises market standards by introducing a new security paradigm, which features 2 layers of dedicated and redundant hardware devices. This setup allows for a dedicated, independent, and highly flexible multi-signature framework. All transactions can be independently reviewed and approved on a dedicated tamper-proof hardware. The hardware security module, the tamper-proof signing devices, and the tailored software solution are all developed by leading Swiss providers with vast experience in finance and IT security. To learn more, visit www.cryptostorage.ch. Have you, in your experience working with BRI, have you seen some industries being more open to this than others?
Yeah, sure. Well, I don't know if certain industries are more open than other industries.
I mean, you mentioned FedEx, right? And it seems like FedEx is doing really well with their blockchain pilot, looking into all kinds of IoT applications. While on the other hand, with many of the financial sector players, it's still somewhat of a hard sell, right? Because it seems to be direct competition. For FedEx, it's maybe something that is just kind of, helping their existing value chain already. Like you said, it transforms the value chain into an asset chain. That's a really nice thing to do. But for the bank, it's more like a head-on collision coming there. So.
I think anybody who became a member of Blockchain Research Institute did so because they're serious about this stuff. And my interactions with all of them has been really terrific. But that doesn't mean that we don't have conversations with lots of companies that say, you know what, we're not interested. And they usually say that for one of 2 reasons. One is blockchain is not a strategic priority for the company. We actually just don't have any interest in this. And we see that sometimes, but a bit less often than we did before. But the other one is we actually know everything there is to know about this, and your institute, is not going to be value add, which to me is a very surprising and odd thing to say, because, we're on the forefront of a new paradigm where all this new IP and new information and new technology is being created. And it's impossible for one company or one organization to have a monopoly on all of that. It's a ridiculous, basic premise for an argument. The evidence is everywhere. I mean, your proprietary blockchain might be interesting, but it's got nothing on Ethereum or Bitcoin or Icon or Aeon or Cosmos or any other public distributed system that's out there. So that kind of overconfidence that we see actually typically comes out of companies in the financial services industry. Not to make a gross generalization, because I have lots of friends in that industry and we have members from that industry, and I think they're all terrific. But there are definitely people who seem to think that they know everything, which is too bad. Because if my whole experience in this industry has taught me anything, it's that you need to be humble, because there's so much that you don't know, and there's lots more that you don't know that you don't know. And every day is a part of a new discovery, right? And that's the joy of being in something new, is that if you're curious and you've got a hunger for knowledge, it's the best kind of space to be in. And I think that's the kind of open, innovative approach that big companies need to take as well.
Well, it's certainly attracting very bright minds, this whole blockchain space, I think.
Yeah, we're seeing a lot of people defecting from big companies to join crypto companies, which is kind of interesting.
I mean, it's such a vibrant space. Yeah. And so
someone said it to me really well. They said, or maybe I read this on Twitter, that this crypto industry attracts the brightest and best people and also the worst people. Because, if you look at these ICOs, there are a lot of people who see this as a get-rich-quick scheme,
sure.
An opportunity, and don't really understand or buy into whatever the underlying technology is, but see, a gold rush happening and are eager to cash in. But then on the flip side, you've got the most talented people in Silicon Valley, Wall Street, from the world of consulting, technologists, developers, academics, all kind of flocking and converging on it. So my money's with that group succeeding over the others.
I mean, fingers crossed. You're located in Toronto, Canada.
Yeah.
How is that as a location for somebody who wants to be at the forefront in this field?
Toronto's pretty impressive. And it wasn't always impressive as a technology hub, but it has become more so over the past couple of years. So I think there's a couple of reasons for that. Some of the founding members of Ethereum and many of the early participants in that token event are from the region. And, not to name all the names, but there are people who are actual founders of Ethereum, but then there are lots of others who are kind of close to the project who were in it at an early stage. And what's interesting about that is that it's created this massive wealth effect that has enriched a bunch of people, many of whom are, technologists and developers and entrepreneurs. And they're looking to recycle those funds into, the community at large. And so in Canada, we actually have a pretty good venture capital community. I think, in 2017, venture capitalists deployed around $3 billion or $3.5 billion in the Canadian economy. But that's not including all of the money that's being put into companies from basically, crypto family offices and crypto individuals who have made money. So it's really gratifying to see people who have done well early, looking to, support the next generation of entrepreneurs and also build up their own projects and their own businesses. So if you were to ask anyone, what are the sort of big hubs for crypto? I'd be surprised if Toronto didn't fall into the top 5, honestly. Mm-hmm. The Ethereal Summit was held here a couple of weeks ago. That had a couple of thousand people. There are events regularly in Toronto that sell out more than 1,000 people. There are meetups every other week or every week. There's dozens of startups in the city. And Toronto in Canada is a great place to live and start a company, I think. So, yeah, I don't want to sound like a tourism ad for the city. But I've been around the world to a lot of places, and there are tons of other places you could be doing this, but I think Toronto's pretty good.
Mm-hmm. Cool. Are you also working with the government there?
So at the Blockchain Research Institute, the government of Canada, the government of Ontario, and the city of Toronto are all members. So we have been working closely with them as members of the organization, and we, in our own way, try to help bring together key stakeholders to convene people in the industry to try and figure out some of these more difficult questions. So 2 weeks ago, the BRI hosted a regulatory roundtable, which actually drew people from governments and regulatory bodies all around the world, not just in Canada, which is great, and also private companies and law firms and other stakeholders that sort of have a vested interest in this whole space, also coming to hash out and talk about key issues. And these are not problems that get solved overnight. They require a lot of consultation. But the fact that the governments in Canada are eager to learn, that they are working closely with the private sector, that they're not trying to just, that they want to be deliberative before they act, I think is a really encouraging sign. Mm-hmm. And I think that the governments in Canada can appreciate that this is an opportunity to create an innovation economy in Canada, and that they should be doing everything they can to make blockchain and the industry successful. One other thing I'll add, which is, Canada is one of these economies that's done very, very well over the decades and centuries because of a lot of reasons. But one of them is that we've got, lots of natural resources. But that's sort of, the basis for an industrial age economy, not the basis for an information age economy. So natural resources are still important, obviously. We've got lots of oil and gas and other things. But creating and nurturing human capital and creating and nurturing the next generation of startups is more important long term. And there's no industry where we're further ahead in the world than in the crypto and blockchain space.
Alex, how did you get into all of this Bitcoin and the whole blockchain topic? I mean, was it through your dad, Don?
It was actually sort of by accident. I was interested in. I learned about Bitcoin for the first time in 2013, and I was reading. It was basically when it moved from Reddit to Bloomberg.
Okay.
And I was working. I was working in capital markets at the time, an investment bank. And so I was not, one of the first early guys to be into this stuff, but I did pay attention early. And, the more I learned about Bitcoin and the underlying technology, the more I began to wonder whether or not Bitcoin and blockchain could actually help to address problems that I was seeing day to day in my own industry. Maybe if you could use the blockchain to create cash for the internet, you could also use it to enable all sorts of other kinds of digital assets. And I was thinking about stocks and bonds and other currencies and lots of assets. To make a long story short, my dad and I were on a father-son ski trip one winter in 2014, and he asked me what I was up to, and I told him I was, still working, obviously, but interested in this new thing. And he said, I'm interested in that stuff too. How would you like to collaborate on a paper for this program that I'm running? And I said, yeah, that sounds great. So I did a lot of heavy lifting on that, and he helped. And that paper became the first of many things we ended up doing together. And then all of that work became the basis for the book.
Cool.
So in the spring of 2015, the tender age of 28, I think, I quit my job to write a book, having never written a book, and with no idea what was going to happen if I, was employable or if I could get a job after that. But I was pretty convinced that this was the beginning of something pretty cool, and I wanted to be a part of it. And, obviously, in retrospect, 3 years later, it was the best decision I ever made.
Fantastic. What was it that excited you about Bitcoin? I mean, you said before, right? You saw some applications in your own work, but was it also the whole ideology that excited you about it?
Well, not directly. Like, I wouldn't say that I was or am someone who thinks that governments are bad or that fiat currencies are all intrinsically worthless. I don't believe that. Mm-hmm. But, I started my career in 2008, right after the financial crisis really kicked into motion. My first week on the job was after Lehman Brothers went bankrupt. And, my firm in its first 2 weeks cut 20% of the workforce. And I saw a lot of, people who were my age kind of getting left behind. I was very fortunate in that I was able to basically sneak beneath the radar my first year and maintain my employment. Seriously. My first boss said that the only reason he didn't fire me is because I wasn't getting paid enough to justify it. But anyway, I was 22 years old. You have to imagine, 22, the fall of 2008, the whole world is going to hell in a handbasket. Yeah. But my point is this, which is like, tech, as a society, we have, inherently been putting more and more trust in technology in lots of different ways. And if you look at how human beings mishandled and mismanaged the economy throughout the 2000s and the lead up to the crisis, there is part of me deep down that, wonders, like, maybe we'd all be better off if there wasn't so much moral hazard, if there wasn't so much conflict of interest, if there wasn't so much greed, if human beings were maybe less involved in how the economy is managed, or at the very least, if technology could offer some aspect of a solution. So that is what I do like about Bitcoin. The idea that there is this thing where you need to have consensus of the network in order to push any new developments, where no single entity has control or autonomy, where everyone needs to reach consensus. I mean, to me, all of that is really fascinating. It's not an ideology that I, buy into religiously, but it is something that resonates with me. And of course, it's one of the reasons that I find this space so engaging.
Alex, who are your role models?
Interesting. I don't really have any role models other than my dad, honestly. I mean, there are people who I admire deeply and who have helped me throughout my life and throughout my career. Many people of my family are role models in a way, but from a professional standpoint, I think I do. I have learned a great deal from the work I've done with my dad and just from living with him and growing up with him. There are lots of people who in my life who I value their opinion and whose insights have helped me grow as an individual. But there's nobody, in particular that I seek to emulate in any meaningful way, other than my dad, probably.
Cool. Are there things, about blockchain technology or cryptocurrencies that you think just now you're understanding what it really can do or what it really means?
I think we're barely scratching the surface. And I think that there are things that I think I understand today, which I definitely know I don't. And we'll see how this all plays out. I have been skeptical about certain aspects of this industry, and my skepticism has been proven to be incorrect, and things have happened faster than I thought they would. So I don't know. We'll see.
What do you see on the horizon for the next maybe 6 months up to 2 years?
I think the three big areas of innovation in the whole space are going to be in the security token space. Mm-hmm. So basically digitizing the entire world's assets and focusing specifically on securities such as stocks and bonds. The second aspect is the proliferation of non-fungible tokens or crypto collectibles. So I think that there are lots of digital assets where crypto that are and can and will become crypto collectibles, but there are lots of assets in the physical world where we can use non-fungible token technology essentially to track, trace, and manage assets in the real world. And then the third area is obviously the migration from proof of work to proof of stake and what that represents and what that means for the world. Mm-hmm. To your earlier point about energy use, this is going to be the big test and challenge for the industry, which is, can these systems, not all of them, but things like Casper, can they make the leap to proof of stake, and what will that look like? And so those are the three things I'm most excited about. In terms of other areas of interest, obviously I'm very curious to know what governments do on this. I think that the Venezuelan government is sort of a harbinger of things to come. It is not the event. It's sort of like the preamble to the event. The event itself is going to be a much bigger, more important country looking to do something along these lines, and that's something that I'm anticipating with both great excitement and also some potential fear and dread. So we'll see. Mm-hmm. But yeah, I mean, I could go on, but those are four areas that I'm pretty excited about.
Mm-hmm. Cool. When do you think there will be some kind of tipping point, where blockchain technology will be almost unnoticed, under running like an undercurrent under a lot of processes that people use every day without even understanding that they're using it?
I think we're still a long way from that. I think, in terms of tipping points, we've hit a few tipping points. We've hit tipping points in terms of adoption of cryptocurrencies. Mm-hmm. We've hit a tipping point in the VC world with ICOs. So there's a couple examples of that. When will crypto and blockchain become so ubiquitous that it's like the air we breathe and we don't even notice it? 10 years.
Okay, that's soon.
Oh, that's soon. I mean, I think a lot can happen in 10 years, right? I mean, the internet itself is still visible. And we're not at the point now where the internet has disappeared. Eric Schmidt, the CEO of Google, said that, in 5 years, this is a couple of years ago, 5 years, the internet will not exist or will disappear. And what he meant was that it will become so ingrained in our lives that we will cease to notice it. So blockchain, is got a long way to go. But if I were to take a stab at a bet, I'd say 10 years.
Mm-hmm. Okay, interesting. If imagine there was no Bitcoin, right? Satoshi Nakamoto had never written that white paper, and there was no blockchain technology. What do you think would you be doing?
I'd probably be doing what I'm doing, or what I was doing beforehand, honestly, which is I'd be. What I do today is not that different than what I did before. I mean, when I was working in investment banking, I was, working very closely with entrepreneurs who were looking for growth capital to scale and grow their business. And that's similar to what I do today as an investor and as an advisor in this space, and as someone who works closely with a lot of different startups. So my passions are similar. It's just how they play out that would have been different. But I think that, if Satoshi hadn't created Bitcoin, somebody would have come along and created something substantially like it, because it was an idea whose time had come, socially, politically, technologically. All the conditions were right for a great leap forward. And all I can say is I'm glad he did invent it, and I'm glad I'm here where I am today and not somewhere else.
Cool. I really enjoyed this conversation. It's always cool to speak with you. And
that was terrific.
Thanks a lot for your outlook and your insight. And thanks a lot for your time today.
Thank you. That was great.
Thanks so much for joining us today. More info on our guest and our sponsors is in the show notes of this episode and on the podcast website, theblockchainandus.com. To help people find this podcast, it's important that you download, subscribe, and give it a top rating and review on iTunes or on the podcast platform of your choice. I'm Manuel Staggers, and I thank you very much for listening.